What to note about making payments and avoiding penalties? As a sole trader, it is important to understand your responsibilities when it comes to making payments and avoiding penalties. One of the most important aspects of this is self-assessment, which involves calculating your own tax liability and making the necessary payments to Home Revenue and Customs, HMRC. Self-assessment can be a daunting process for many sole traders, but it is essential to get it right to avoid penalties. The first step is to register for self-assessment with HMRC, which can be done online or by post. Once registered, you will receive a unique taxpayer reference, UTR, number, which you will need to use when submitting your self-assessment tax return. When it comes to making payments, it is important to be aware of the key dates and deadlines. The deadline for submitting your self-assessment tax return online is the 31st of January following the end of the tax year. Failure to meet this deadline can result in an automatic penalty. In addition to submitting your tax return, you will also need to make payments towards your tax liability. These payments are due in 2 installments, one on the 31st of January and the other on the 31st of July. It is important to make these payments on time to avoid interest charges. To help manage your tax liability, it is advisable to keep accurate records of all your income and expenses throughout the year. This will make the self-assessment process much easier and reduce the risk of errors. In conclusion, self-assessment is an important process for sole traders to manage their tax liability and avoid penalties.